Hi there, I'm Lisa Doyle with Sereno Real Estate, Christie's International here in our beautiful East Bay. Hope that you're all doing well. So I want to go over two things today. I've had a ton of questions about two things. Where are we at with real estate? So I'm going to cover that. Where are we headed? What's going on with the East Bay pricing? And what are we likely to see moving forward? And secondly, the Silicon Valley Bank and what's going on with the failure of that bank and how that might have aftermath in our area as far as real estate. Obviously lots of concerns about that, but a couple things that I wanted everyone to understand from the research that I've done this last week, learning all about this bank and what's caused them to fail is number one, were highly leveraged on startups. That would make sense, right in the heart of the Silicon Valley. Much of the innovation and technology startups begin in that area, or that is one area where they are highly leveraged. Well, that bank had tremendous loans with startup companies over the last few years. COVID did cause a couple of things, and a lot of it was innovation and a much more technology rushing into the marketplace, which is very exciting for, I think that's one of the only good things about COVID is it gave us innovation, right? People were trying to figure out ways to communicate better. And so a lot of that, the money that this bank had invested came from startups. I would say it's probably even worse than this. Maybe 1 out of every 1,000 startup actually survives. They were highly leveraged in that area. And most banks, what most people don't realize is banks don't just keep their money. They loan out or a good portion, over half of the money that's in their bank is loaned out to the U.S. government, loaned out to industry. That's how they make their profit, right? They make loan. So if a lot of people need access to their funds all at one time, obviously it causes the bank to be insolvent, under-leveraged, and over-leveraged. And they failed. So I just want you all to know, most banks are not in the position where they're making those high-risk loans to the degree that this bank was. So we are unlikely to see any issues with other banks, but we'll see moving forward. If you have questions, of course, give me a call direct. And secondly, I want to share with you what's going on with the East Bay market. We have seen a stable market. As most of you probably know, the first half of last year, in my 36 years in the business, was unprecedented. Demand that we'd never seen and growth in pricing that was, like I said, an unprecedented rise in pricing over the last few years, but more so the first half of last year. Second half of the year, interest rates jumped. The market became much more soft. We saw a basically softening in the market. First 2 months of this year, we've been stable. I want to give you guys a heads up. So I always track what's called the active and pending ratio. It's like supply and demand 101, right? How many active, how many pending? Right now in our East Bay is 493 active, 481 pending. We are even. We've been even all year. Even December of last year started becoming a little bit more robust into this year, much stronger. We were just back in November in our East Bay, 569 active and only 234 pending. So we've improved, right? Every city in our area has seen a stabilization. So I'm going to go through a couple of the cities with you, but I want to share too. February of last year, 2022, there were 548 homes closed to escrow in February of 22. In 23, not as active a market. Obviously, we knew that. 333 closed this year so far. So we're still not as heated as last year, but we are stable. For any of you that have been wishing and hoping for a real estate crash, we're just not seeing it. We're just seeing stabilization. As I said, active is pretty even to the stable. Every city in our market, other than one is more heated than the others, and I'll share with you. So San Ramon has 56 active, 47 pending. Danville, 61 active, 51 pending. Blackhawk, active 13, 3 pending, a little softer there. Walnut Creek, 73 active, 58 pending. And Dublin's the hotspot, 31 active and 50 pending. So we're stable, you guys. I just want to fill you in. Right now, we're seeing a stable market. I propose that the rest of this year, I think we're going to stay stable and level. We might see a little bit of bumps in the road or a little bit of up and down, but basically we're in a stable environment. Demand remains high. There's a lot of pent-up demand from people who could not buy last year. I think our interest rates will be falling over this next 12 months. We'll see. I'll be tracking that closely for you. Right now, we're hovering right around the mid 5% for most people. If you have good credit, you might pay a little bit more than that with some institutions, a little bit less than that if you have a relationship with your bank. But we're stable right now. So you guys, if you have any questions, let me know. It's a good time to be a buyer or seller. Let me know if I can help you guys with anything you need. I'm Lisa Doyle. You guys take care and stay well.